Today, I want to talk about credit scores and the differences that you will see from your consumer report to what we will get on our residential mortgage credit report. I hear this question all the time, probably at least 10 times a week. Why is my credit score lower on your report than what I'm seeing online? I check my credit score, it says 750 or 720. You have a 680 or a 650. It's a common question. So you're not the only person that's going to say that. And this is why. So we're going to explain this. What's happening is you're usually looking at a Vantage score. Most credit apps like Credit Karma, Credit Sesame, many of the banking apps that you use, they show your Vantage score. Mortgage lenders do not use a Vantage score. We use a FICO mortgage score. So our FICO mortgage score, when we pull you for a home loan, we use specific FICO scoring models. We use your Experian FICO 2, your Equifax FICO 5, and your TransUnion FICO 4. These models were built specifically for mortgage risk assessment. So when you're looking at your banking app, it's more of a consumer report, just really to let you know where you stand among the other people who use that same app, not so much what your mortgage score is, or your credit score is. And if you look at certain apps like Experian, and some of the other apps, if you go through there that you actually pay for, not the free apps, it'll give you your different score for each thing that you're applying for. You'll have a credit card score, you'll have a car loan score, and you'll have a mortgage score. Those so those models are built specific. Those models are built specifically for that, and you monitoring your credit. The real estate mortgage credit report, ours tend to be more conservative, more sensitive to debt, and more reactive to late payments. So where you could have a couple accounts late, but everything else is on time, you can still have a higher credit score on your consumer report than that's going to come up on your mortgage credit report. So that's something to think about. Why mortgage scores are often lower? Because our models weigh heavily credit card utilization. So that's when we'll say, hey, you may want to pay down the balance on your credit cards below 30%. Recent inquiries, don't have a whole bunch of inquiries. Like, so if you're shopping for a mortgage, of course you have that 30-day period to where multiple lenders can pull your report, and it only counts as one inquiry. If you're shopping for a car, then you looked at a credit card, then you went to refinance your student loans. All those are different inquiries, and it's going to hit your credit report and knock your scores down. Late payments are a big deal. Usually, a lot of times when you're applying for a mortgage loan, unless you have a real high credit and all your other credit is strong, you have multiple trade lines. If you have more than two 30-day lates in a 12-month period, you may not get approved, or you're going to be refer eligible. And then unless you have other assets or compensating factors, you may not be able to get approved for the mortgage loan. So you want to definitely be careful on your late payments, and especially installment late payments. Collections, even very small ones, will drop your scores on a mortgage credit report versus on the consumer report. Your debt to income your debt to income behavior pattern. So if it looks like you're increasing, we use a trended report. So if it looks like, okay, now over the last 6 months, he or she's getting more and more debt, it's going to actually trend down your credit scores, because it shows that you're kind of living off your credit cards and everything. So you having a 720 consumer score, that may be realistic for it to be 20 to 40 points lower on a mortgage credit model. So usually there's no mortgage program that requires you to have more than a 720, and definitely not more than a 740. So people are like, oh, I want to be at an 800. There's no mortgage program that's out there that requires you to be at 800. You can actually get 100% financing with FHA loans at a 600. Same thing with, you can get 100% financing on conventional loans with a 620, as long as you meet the other guidelines. The difference that your credit scores will make is that it is, of course, is going to affect your interest rate, your down payment requirements, and your loan program eligibility. A lot of the programs, like we said, FHA, if you want to put down the minimum down payment of 3.5%, you would need a 580 credit score. Conventional, if you're a first time home buyer, then you want to have at least probably a 660, 680 if you want to put down just 3%. USDA, you definitely want to have, you can do no credit score, but it's a little harder. Those are manual underwrites. USDA, I would suggest that you have at least a 620. VA, if you can be around the 580, preferably a 600, you'll be good. So the good news is that the score matters. It also depends on the type of mortgage approval that you're looking for. So yes, you may not be at a 720, but you're at a 620 and you're a first time home buyer and you're under the FHA limits, you could still put down 3.5%. You could still get down payment assistance and those things, but it would affect your rates. Some programs that are out there that are state sponsored, they just have one rate. So believe it or not, the person with a 640 gets the same credit, gets the same interest rate as the person with the 740. These are some things that you want to think about. And before you apply for new credit, you know, you want to check with your mortgage lender if you got to apply for new credit. If you're actually looking for if you're actually looking to get a pre-approved for a mortgage or in the process of looking for a home, first of all, call your lender. Make sure that you don't pull your credit report or get new debt. We do pull a soft pull report right before you close. And if you've gotten new accounts open or you've charged up a credit card bill that's way above your average of what you usually pay, that can knock your loan out and disqualify you, and you won't be approved for the loan that you initially started, and you may be under contract. So don't apply for new credit. Don't pay off accounts in the wrong way. And what we mean by is paying off accounts in the wrong way. You might go pay off this $50 collection, which may be something you want to ignore, or you want to say, I'll pay this off, but I want y'all to totally delete it off my report, not just show it's paid. Because if by just paying that collection, it'll actually update the last date of activity. So the credit bureau doesn't look at like, oh, well, it's zero balance. It looks like, oh, it was a collection. It was a collection action just taken 30 days ago. Don't close your credit cards. A lot of people say, oh, I want to, before you pull my credit, I want to pay off all my credit cards. Don't pay them off. Don't pay them to zero. Leave some small balances, and don't start transferring balances on your credit cards. You really should talk to a mortgage professional. Let us look at what matters to you for your actual mortgage approval, not for what you think or the myths you hear, what you see online. Everybody's situation is different. Two people could have the same accounts and everything, the same amount of income, and one person's credit score be higher than the other just because somebody has, you know, they have more credit depth available than the other person. They have more trade lines, and the other person may have had something, they may have the same credit score. That person came from an 800, but they missed 2 car payments and a credit card payment. So they're both at a 720, but one person's trending down and one person's trending up. So this is what you have to look at your particular plan, not just what you hear, oh, my friend had this and they got that. Not all credit scores are treated equal. So if you're thinking about buying a home this year, let's review your true mortgage scores for your mortgage approval and create a game plan based on your personal situation to get you started. If you want to get started, you can text me credit or call me at 404-461-3172 or contact me at reggieloans.com. Talk to you soon.